Hello everyone. Well, after its miserable performance last week, the dollar gained modestly against several currencies overnight. Its biggest gains were against the yen after the Bank of Japan Monetary Policy Board surprised the market by increasing several lending facilities. While it's questionable how much effect the move will have, because companies already have record amounts of cash, so funding constraints aren't holding them back, nonetheless, the move is a sign that the Bank of Japan is concerned about Japan's weak growth after the disappointing fourth quarter GDP data and is committed to supporting the economy as much as possible. That increases the likelihood that it'll decide to accelerate its expansion of the monetary base after the consumption tax hike in April, which would be yen negative. Personally, I expect that they will do that and that the move will further boost dollar yen at that time. Aussie dollar was little changed after the release of the minutes of the latest RBA meeting. The RBA noted that the Aussie dollar had depreciated further since the December meeting and said, if sustained, a lower exchange rate would be expansionary for economic activity, blah, blah, blah. This was in contrast to their statement in December when they said the exchange rate, quote, remained uncomfortably high, unquote. In other words, the RBA felt at the December meeting that further depreciation was necessary, but by the time of the February meeting, they thought that the sufficient depreciation had already been achieved. Personally, I don't think the decline in the Aussie dollar from December to February was that significant, and I think the country's terms of trade are still deteriorating. When I read reports about iron ore stockpiles in China reaching record highs, I can't be optimistic about the Aussie dollar. Take a look at our website where I've got a graph of it. Now, the main event on the European agenda today is the German ZEW survey for February. The current situation index is expected to rise, while the expectations index is forecast to fall slightly. It'll be interesting to see which one the market puts more emphasis on. Last month, the expectations index came out first and was below forecasts, which sent euro-dollar lower. But a few minutes later, the current situation index came out better than expected, and euro-dollar recovered the lost ground, which suggests that the current situation index is the more important of the two. From the UK, the nation's CPI is expected to remain at 2% year on year, which isn't likely to have a material impact on the pound. In the US, the Empire State Manufacturing Survey for February is expected to fall slightly, but as the January reading was a sharp and unexpected rise, I wouldn't expect a modest payback decline to have a negative impact on the dollar. The National Association of Home Builders Housing Market Index for February is forecast to stay unchanged at 56. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.